Hey everyone, SoundHound AI is really optimistic about its long-term prospects heading out to 2025 and beyond. So in this video, I wanted to cover some of the reasons why SoundHound AI is so optimistic about their long-term outlook and over the medium term as well. So follow along, let's dig into the details here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, SoundHound AI has been so optimistic, they're even raising questions from analysts like Scott Buck from Wainwright and Company saying, could you tell us a little bit more about your visibility into the year 2025 and why maybe you're comfortable putting out the kind of optimistic target that you put out for 2025? And if you're not aware of that outlook that SoundHound AI put out for 2025, let me share that with you here. SoundHound AI gave its business outlook for 2024 and 2025, saying that for 2025, it expects to accelerate revenue in excess of $100 million and achieve positive adjusted EBITDA. That's going to be on top of the growth to 70 million in 2024. So SoundHound AI expects to boost revenue to 70 million in 2024, and then from 70 million it expects to generate at least 100 million in revenue in 2025, and accompanying that 100 million in revenue is going to be positive adjusted EBITDA, earnings before depreciation, amortization, interest and taxes, all of that in 2025. So understandably, Wall Street wants to know why they feel so comfortable in giving this kind of guidance. And so SoundHound AI CFO jumps in and says, well, it's for a couple of different things. Number one is that we're building and we're making choices to sort of build a multi-year roadmap, and that we're not playing short-term quarter to quarter or even 2 quarters. So we're planning ahead. The pipeline we're building with the customers we feel comfortable with. We're working with the investment and we're making to drive scale. So they're building the supply, the capability in order to fulfill the demand, which we've seen in a lot of the other videos that I've covered. Customer demand for SoundHound AI's products and services seems to be there. There's strong organic demand for SoundHound AI's services, so it makes sense for them to ensure they have the capability to supply those customers. And so now that they are confident about the capability to serve those customers, they've been comfortable with the demand side. Now they're comfortable with the supply side, so they feel comfortable giving this longer term outlook. So they know that there's just a lot more pipeline and traction that they're gaining. So we felt confident enough to sort of give 2025 outlook, which obviously we can calibrate as we go forward. That's an interesting comment there. We can calibrate as we go forward. Now, companies usually dislike to downgrade guidance, and their stock prices usually get punished for doing that. So even though they do have to sometimes downgrade guidance, but when they're talking about looking forward to calibrating guidance, it sounds like SoundHound AI might actually raise that guidance for 2025 as they go forward, as more information comes in. Now, I could be reading into that too much, but you can judge for yourself. Every time a company downgrades guidance, the stock price goes down. So that's not something they look forward to doing, and that's not something they'll forecast ahead of time and tell people, hey, we might downgrade that guidance, so keep an eye out for that, right? They won't go out of their way to mention that, but they will mention the fact that maybe they gave conservative guidance and they're going to raise that guidance, right? You hear management talking about that very often, like, we gave conservative guidance, so we're probably going to increase that to kind of give analysts a heads up and kind of boost the share price ahead of a potential increase in guidance. So that's something I'll keep an eye out for, and I'll certainly update you as it goes along. The same analyst also wants to know, does that mean there's going to be any merger or acquisition or something on top of those figures that you feel comfortable giving us those numbers, because you're going to buy a company or merge with the company and you're going to bring those companies' revenues onto your own, and that's what's going to boost revenue up to that 100 million figure? Is that why you're feeling confident about giving the guidance? And the CFO says, not necessarily, but in terms of the future opportunities, we'll continue to look. We think there's a very dynamic market with a lot of potential opportunity organically, which means without acquisition, and then even possibly inorganically, which is with an acquisition. So the CFO saying, not necessarily the 100 million is going to be with an acquisition, but it could be. We could make an acquisition over the next couple of years because there's a lot of potential opportunities out there, but that guidance we're giving doesn't necessarily include an acquisition. So speaking of acquisitions, the same analyst wants to know, can you perhaps in dollar terms tell us maybe what the opportunity is for synergy with the acquisition of Sync, which they recently made? So the CFO saying, okay, so first of all, they bring a great portfolio of customers. And we had a thesis when we acquired them as to what the possibilities could be. And the CFO saying, I'll tell you, in early days, it's even more exciting than we anticipated. So that's good to hear. What we can do together, to your point, in terms of cross-selling their solutions, bringing together different voice solutions, upselling some employee assist capability, smart answering. There's so many conversations going on. And the one thing that companies never like to mention when they make an acquisition as part of the synergy, as part of the reason for making the acquisition, is that you remove a competitor off the playing field. You're no longer having to compete with this company that you're acquiring. So they don't like to mention that because regulators do not like when companies merge, because it reduces competition, which then leaves customers with fewer choices and gives companies more pricing power. If there's fewer competitors, then you can price more robustly, let's just say, because you're not worried about a competitor undercutting you on price, or you're not worried about a customer going to a competitor. You can then say, here's our price, take it or leave it. We know we're the only game in town, right? But of course, they're not keen to talk about that, but that is a reason, and that is one benefit of making an acquisition, is that you take a competitor off the playing field. And then anytime when the two companies come together, there's a lot of work to integrate, and we're in the middle of that. Yeah, there's always the digestion that needs to happen when you acquire a company, and that's not always smooth. It's different every time. There's no systemic way that every acquisition you can digest it in a certain way and you can get good at it. Maybe after a while, after many years, if you've made dozens and dozens of acquisitions, you can get good at digesting them quicker and in a formulaic manner. But in the early years, when you've made fewer acquisitions, it's difficult. It's difficult. It's difficult. So it's gonna take some time. And we're talking the opportunity in the restaurant space is in the billions and billions of dollars in annual revenue. Billions and billions they're talking about, right? So long runway to go. We just talked about their 2025 guidance of 100 million in revenue. They're talking about prospectively billions in revenue. So 10, 20, 40x from here. It's understandable. You can see why management maybe is optimistic about their long-term prospects. And they're just scratching the surface of it. And together, they think they can go faster and capture a greater share of that opportunity. So they see a big opportunity ahead. And so this acquisition will help them capture that opportunity. So early days, right? They still have to digest, but there's just some early insights into this. And of course, I'll be updating you as it goes along, as more information comes out. I'll be sure to let you know. But wow, they've certainly got great long-term prospects. But I will caution you, some of this could already be priced into the stock. SoundHound AI stock is trading at a forward price to sales of 15, on the more expensive side where it's been in the last year. And you can see in the last month how much it's risen, almost 4x in terms of valuation. So how much of this excellent long-term prospects are already priced into the stock? I would say a great deal of it already is priced into the stock. So be cautious out there around SoundHound AI stock, even though its prospects for the long term are excellent. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.